Larry Porter,
Here.
Les Boatwright,
Here.
Joe Zach,
Here.
David McDowell,
Here.
Bridget McCandless,
Here.
Sherry Tyndall,
Here.
Anthony Jeremita.
Here. Thank you. We need to, I don't know whether anybody remembers them from April 15th and May the 20th. Have a motion to approve the minutes for those dates.
Mr. Chair, I'll make a motion to approve the minutes of April 15th, 2021 and May 20th, 2021.
Have a second.
Second.
Moved and seconded. We need a roll call on that.
Any comment?
Huh?
Discussion.
Anybody need to?
Anybody want discussion? They're in your packet. Hearing none.
Larry Porter,
Yes.
Les Boatwright,
Yes.
Joe Zach,
Yes.
David McDowell,
Yes.
Bridget McCandless,
Yes.
Sherry Tyndall,
Yes.
Anthony Jeremita.
Yes. Motion passed. Next item is WPC refunding revenue bonds and the outcome from the PFM financial advisors. You're up on the big screen.
Yeah, if you don't mind, I'll just go ahead and introduce real quick. This is Chris Lever. Well, my name is Brian Kidney, the Director of Finance Administration. Chris Lever with our financial advisors, PFM, is on the call. We had an incredibly successful refunding of our bonds, and we just thought it'd be a good idea to give this advisory board an update of the success that we had. So I'll just turn it over to Chris then.
Good afternoon, and hopefully folks can hear me okay. Did we want to share the screen, or does everybody have the slides in their packet?
I think everybody has the packet and all the slides.
Okay. All right, so we'll go through the slides. And on the cover here, we basically had two series of bonds which city issued. The first one was tax exempt, and the second one was taxable because the second series was an advanced funding. And by IRS rules, we had to issue tax debt. So in total, about $65 million of bonds were issued. And then in terms of accomplishments, so I'm on slide 3, basically issued $70 million of WPC debt. And the savings were over $22 million in cash flow. And that represents about 23%.
Could I interrupt you just a minute?
Yes, sir.
Could we share it on the screen for the audience that's not here without packets?
Yeah, I could switch it over here. Be sharing my screen
Yeah.
here.
Okay, thank you.
Folks, see that? Okay. So on our second bullet here, as Mr. Kidney mentioned, very successful transaction, over $22 million of cash flow savings broken out between those two series. You know, that represents over 23% of your existing debt service savings. So really a very nice transaction. Very strong savings numbers. A couple other things that were accomplished is that we integrated kind of a new finance team together. PFM is new to the city, and I think the transaction went very well. Hopefully the city agrees. We also had a bank, Morgan Stanley, as their underwriter, and they had not previously worked with the city before. And we also had a person, an entity called cont'd, that were the ones who got their escrow security. So kind of a new team, and we got this whole transaction across the line in a good time frame. The ratings were affirmed for WPC at A+, and we had some great investor responses. 20 large investors, over $100 million in orders, and interestingly, we had about 7 million in what we call retail orders. So this is people who are in and around the city of Independence, people in and around the state who buy these bonds for the tax advantage they get. So some of them went to individuals, and some of them went to bond funds focused on Missouri. So it's a very strong response, something we hadn't seen in the market recently. So very good for the city. The bonds are priced very competitively, meaning the highest yield on the bonds is the highest, under 3%. So rate of inflation, so a good time to be borrowing money and doing this for funding. On our next slide here, we can see this is the savings pattern. So the black line is what the WPC debt service looked like, and then we were able to restructure the debt profile by shortening the refunding bonds. So we can see that on the first series, we had 2041 as the prior maturity, and we took off 5 years there, and we took off 3 years on the second series. So we were able to essentially, give you guys a bunch more operational and financial flexibility for whatever needs may arise down the line, while also securing some nice savings funds. So here's kind of the down and dirty numbers. The savings largely accrue in that area where we lopped off those last few years, the old bonds. So you're saving about $40,000 to $50,000 for the first, call it 15 years or so, and then the majority of savings comes in at the end. So what we say here is this is basically like refinancing your house and taking it from a 30-year mortgage to about a 15-year mortgage while maintaining your current, not raising your mortgage payments. The same principle here, and it does, again, provide a lot of flexibility down the road for WPC in the city. The reason why we're able to price these bonds so well is basically it's less than supply and demand. On the left-hand side, we see the supply of municipal bonds coming in the market. So you're in essentially the stack in here, the green stack. And on the right-hand side shows the money, the dollars coming into the municipal bond complex. So blue means good. So we have lots of money coming into the muni bond complex. Every week it's close to $10 billion funneling in, and it's pursuing a smaller amount of bonds. So that really helps drive our interest rates lower. And then we can see on our slide, here's the data behind that. So this is our tax-exempt rates priced the Series A bonds with. And you can see the bottom line here with this blue arrow, the percent of time lower. So this is, percent of time rates have been lower than where they are when we price these bonds. You can see 2 to 3%. It has been better rate environment. So 97% of the time, rates have been higher. So again, great time to be an issuer. This is our tax exempt market. If you go into our next slide, this is the taxable market. And, the numbers here, percent of time lower, are slightly higher. But still, you can see that it's a great time to be an issuer, even on a taxable basis. Slide 9 has some data on the actual pricing, but we highlighted in green what the yields are. So this is kind of the effective cost of your debt. And what we wanted to point out is that on the Series A, that upper left box, the highest rate you're going to be paying is under 2%. And down on the taxable side, it's under 3%. So again, about the rate of inflation. So a nice transaction. Slide number 10 illustrates the order flow. So this was essentially that $100 million of orders I talked about previously. And as an example, on this 2036 maturity, if you go all the way over to the right-hand side in the purple box, you can see 300%. What that means is that for every dollar of bonds, you had $3 of orders. So that helped us tighten up those spreads and lower those yields for WPC in the city. The other thing I'll point out is that there are a couple of maturities here where you don't see much demand. There's 0% orders or no orders here, and you lack a full order book here where we have 22 and 21%. And the nice thing is that Morgan Stanley, as your underwriter, basically said they're going to take all those bonds, underwrite them, bring them into their inventory, and then after we closed, they then started selling them out to actual investors. So they underwrote a few $1 million to keep the transaction, together, as we say, and get it over the finish line. Like about 5,000. You have some big names who bought your bonds. A couple will point out: JP Morgan Asset Management, Nuveen, U.S. Trust, a portion of U.S. Bank also bought some bonds. So some really nice names that showed up and participated in the transaction. On the way ahead, I think we closed this already, so you're going to start seeing savings accrue this year. It's not a ton of savings, again, as we restructured the bonds and shortened it up quite a bit, but you will start seeing some debt service savings. We're going to drop a note to your rating agency and let them know how well received this was. Keep it on the forefront of their minds that you're doing some smart things, independence, and well received by investors. We had a good bank performance by Morgan Stanley, and really you have some other refunding transactions coming up across the other utility departments. And I think we're going to get started on the IPL transaction just after the start of the new year. So I think that really concludes the highlights of what turned out to be a very nice transaction for the city. And any questions, I'd be glad to answer them.
Thank you very much. A nice presentation. Does anybody have any questions or comments? Hearing none, I guess we'll go to the next item. Thank you very much for your presentation.
Thank you.
Okay, IPL Interfund Charges. Who's got that?
Again, Brian Kidney. Several years ago when I first got here, one of the first items that we noticed staff-wise in the Finance Administration Office is that the cost allocation of the administrative costs that were charged back to the three utilities hadn't been updated for some time. And so we started doing research into understanding what the background information was, how were the percentages allocated. There was a lot of, well, that's the way we've always done things, or this is the allocation that it used to be, and we just carry forward. So with the permission of the city manager's office, we embarked on updating and upgrading to what we would call best practices on a good cost allocation method. And so we searched around looking for a company to assist us with that. We found a company named eCivis. eCivis is the company that we like to think is kind of the major players out there. A lot of the work that they do is they do cost allocations for federal grant purposes. And so they have been continually audited. Their reports are continually audited by federal auditors and grant auditors. And so over time that they've really developed then what are really known as what the best practices are and how you should be allocating things out. And so we embarked on that project. I'd say Cindy and of course Natalia, she's back there, worked with the company it was quite an extensive process. So we've now implemented the first phase of the cost benefit analysis, and that was the actual administrative overhead costs from the general fund and any other funds, allocating it back based on certain percentages based on different allocation methods. We then had two other phases. One was, I think this board has really asked about those costs between the two utilities, customer service charges, why does water charge this or what electric charges this, and then the meter reading and rent charges amongst the three utilities. And so we turned all three phases over to eCivis, and they've completed their report, and we'd just like to be able to have the opportunity to present it to you today.
Fine.
Great. So I'm going to introduce Nikki Latini with eCivis, and she's on. Yep, she's right overlooking me here.
Hi.
So I'll just turn it over to her, then be ready for any questions.
Hi, everyone. Thank you so much for your time today. My name is Nikki Latini. I'm from eCivis, and I am the VP of Indirect Services over here. I have been doing nothing but cost allocation and indirect cost of service studies for the last 20 years. So it's one of those things that I really enjoy. I know I'm weird like that. But I am going to go over today some of the results. But before we get into that, I wanted to just give a little background on the process so you guys understand what we've gone through to get to where we are. And then we'll go over the numbers that is really what's important to you guys. So I'm going to go ahead and share my screen. And I believe you guys have this with you, but
Yeah.
I'm just going to go through it. You guys see the slide okay?
Yes.
Okay, great. So one of the things, so this is just the agenda of things we're going to talk about, like what is the cost plan, what are some of the trends that municipalities are taking, the uses, and then we'll go into the data. This is not important to read. I just wanted to put it out there to let you know that the process we go through, we follow the federal guidelines of how to produce the cost allocation plan. And the reason for that is we want to make sure we're in full compliance, that this is the generally accepted accounting practice for calculating indirect cost or cost of service. So we just wanted to share with you that part of the federal guideline in the 2 CFR Part 200 actually states there needs to be this process within your agencies in order to understand what it's costing to support all the programs and services that you're performing, regardless of the funding source. So in general terms, we use this to calculate the first step is the cost allocation plan. And we use that to calculate your citywide, agency-wide indirect cost of services. So we look at, finance, HR, IT, facilities, all of those support departments that are allocating out costs and supporting the entire city rather than supporting the public. We determine through allocation statistics how to best allocate out those costs to the people who receive the benefit, which results in a total cost of service or indirect support that the general fund can be reimbursed for services that happen from outside funds and programs. So the results of that process that we went through, you'll see here, this is kind of a breakdown by department, the different central support departments that we allocated costs out of. So it was a total of about $10 million. And just for perspective, the city's total budget is $313 million. So it's about 3.2% of the overall costs are really deemed support costs that we need to identify out to who receives the benefit. You have a question?
Any questions?
He's lost the projector, that's all.
Your projector went off.
Our projector.
Oh,
Ours did.
Yeah, we can still hear you, we can't see you.
oh, you can't see me or see the report?
He's bringing it back out. Yep.
In the slide. Okay. All right. So it doesn't have. So did you guys see the numbers? Would you like me to put it back on the slide that had the numbers by department that we were allocating?
I don't think you need to. Is there any?
Okay. Perfect. No, there's no need for it. I just wanted to make sure. Okay, so as we mentioned, that this is following the guidelines, the methods we use to calculate a cost plan is we break our costs into functions. So for example, with finance, you might have payroll, general accounting, accounts payable. We break them down into functions, and then we allocate out to the people who receive the benefit based on different allocation bases. So for payroll, we might use payroll checks. For accounts payable, we might use AP transactions. So the idea behind that is that we are trying to identify costs as best as possible. Allocation isn't a perfect science, but the idea is that it should be relative to the service being performed. So if you're not receiving a benefit from the service, you would not receive an allocation. So the uses, there's multiple uses for a cost allocation plan and why agencies, would want to go through this process. And one is understanding what the full cost of service is for each and every program. Doesn't matter if it's federally funded or if it's, a utility and paid for by the public, or if you use it on maybe your user fees. Those are the ones where you're charging, let's say, developers for permits and plan tech fees. All of those, this gives you that layer of indirect cost that needs to be accounted for in order to receive your full cost of service reimbursement. You can also use it on federal and state programs that if you're getting any grants, you can get indirect cost recovery from those as well. So I've kind of already gone over that in terms of the benefits, but one of the things I think is really important about this document is that it is that one document that kind of brings everything together to give you that 30,000 foot view of your city and what it's costing to support across the board. So I think that's an important tool to have because, you know, we have a lot of information in different systems and different departments have different information, but this kind of brings it all together to look at a citywide view of the full cost. It provides a uniform method, and as I mentioned, it is that generally accepted accounting principle of indirect. So if it ever gets challenged or it needs validation from, let's say, a developer challenges the cost, you have this document that is accepted and is a general best practice of calculating indirect cost. Understanding your indirect costs, you know, we talk in different terms. So you'll hear us say cost allocation plan, cost of service study. This kind of just gives you that the indirect cost rates or the percentage to apply to every dollar, whereas the cost allocation plan is giving you that annual cost of service. This helps you to understand what it's costing so you can be more sustainable and make strategic decisions on how to move forward on certain projects, and then make sure you're achieving the maximum reimbursement and your maximum impact on the programs that you are. So it informs you of that information and knowing what it's really costing. So the process that we go through, this is the same for the cost allocation plan and the cost of service studies for the customer service and meter reading. Basically, we meet with the departments. We understand the functions of service that they are providing. We determine reasonable allocation bases to spread those costs. And then for we spread the staff to the functions that they are supporting. And then if there is any direct bill credits, meaning that someone paid for those services throughout the year, we make sure to credit them so we're not double charging, and we go through that process. That is what we do on an annual basis, and that will give you that information. Just so you guys have an understanding of some of the best practices, there was a study done on some of the different types of cost centers that are being spread and how like general bases are. So you can see that we're right in line with how we allocate our different functions of service within the City of Independence. So you can see that it's not something, again, that we just made up, that we are using industry standards when we look at the different allocations. Okay, so this project has been done in multiple phases. We started with the citywide cost allocation plan so that we could feed the indirect cost into the customer service and meter reading allocation, and then we're going to subsequently then do the rental rates as well. So the first phase was, sorry, is there a question?
No.
You might tell me what
Okay.
she's on.
Okay, sometimes I hear stuff and
What page
I
are
know I
you
just.
on? What page are you on?
I am on slide 16.
You're moving faster than we can turn.
Oh, I'm so sorry. I tend to talk fast sometimes. I apologize.
That's all right.
It's all right.
I don't want to bore you guys.
We're
Let's
fine.
get to the nitty gritty. Okay.
We're working on that.
The first phase of the allocation process, as I mentioned, was that citywide cost allocation. So as you can see here, the main funds that we are looking at in terms of a previous allocation and a new allocation. So the allocation that was done in the past, you'll see to these funds, power and light, water pollution, water, you can see the amounts that were allocated in the past to the current year. Some were increased and some were decreased based on the different allocation methods. And these were also the costs that were used to spread when we are looking at what's it costing to do customer service or meter reading. So we bring in some of those costs from the citywide support in order to allocate out. So just in addition to make up to that $10 million that we had discussed before of the cost of the support departments that we're allocating out, you can see some of the other funds that were being allocated. The general fund at the $4.2 million, typically speaking, you don't, charge those general fund departments, but this can be used, as I mentioned before, in user fees to determine full cost of service. You want to make sure you bring in those costs when you are determining your fees for charging out to the public. And then you can see the other funds listed here. So then we moved on to the customer service, cost of service study, and the meter reading. What we did here was break down the customer service into functions of service that they're supporting, like billing and different things. And we had different allocations for those. So in the past, there was just a straight percentage of cost. So you can see the 83 and the 17% paying from power and light to water or water pollution to water because customer service was housed in water. You see the allocation. We then spread things out. You know, there's a call center, the utility billing system, we use user accounts or the setups. We use the number of accounts for the public, you know, residential versus commercial, that type of thing. So the new allocation we showed here in two different amounts. There was a one-time pimentis charge that was waived, I believe, in the prior year due to COVID. So that was brought in to now work that into the recovery. So we're showing that with the pimentis charge so that you can see in the next year this is the amount, but the expectation to come for future charges will be more of the column where you see the one-time pimentis charge taken out. So the 1.2 million versus the 1.1 million in the past, and then 550,000 for water pollution control versus the 240 from the past. So that's what you can expect moving forward. So then we are looking at the rent. That is one aspect, the last aspect of the project that we are currently working on and hope to have some numbers here soon. So right now you don't see a new allocation amount because we are working on the process as we speak and should be done here shortly. So we can get that information to you as soon as that happens. And then lastly, we have field services and meter reading. Again, we're done on flat percentages. So we were looking at the number of meters for meter reading and really took into account the level of effort that is done through this process and how that should be factored into, say, water pollution control or water. We determined, you know, what standard practice was in the industry, as well as, you know, information that we could obtain given the number of meters and what their level of effort was. So you can see that the change in allocation from water to power and light went up slightly, and then also the water pollution control went way down. So we base this on the number of number of meters. And then field services, we looked at the dollar amount of revenue per fund, excluding the wholesale revenue, and then this adjusted the allocation down as well. So you can see, you know, where those process, you know, what we looked at was in field services, a lot had to do with power and light and less with water. So that was reduced through this process. All right, well, that is all for what we're going through. As I mentioned, the last phase is the rental charges, and that will be here shortly. But we have made it successfully through the citywide cost allocation and the cost of service studies for customer service and meter reading and field services.
Okay, thank you very much. Any questions? Anybody on the board? Go ahead, Bridget.
My questions are not for you. Thank you for your wonderful presentation. My questions really are for the staff. What are the implications for the budgets for the three utilities with this change in allocation?
Obviously there are some changes because of the amounts based on the allocation. Probably the biggest change was the general fund charge to water for their indirect cost. And really, the largest, that really had a lot to do with, we used to do the utility billing. We'd actually send the bills out of the finance administration charge. That expense has gone away for us, and it's been picked up by the water department. So even though the transfer from the water department to the general fund is going to be lower, that's offset by the fact that they've picked up that service now. The other ones, I think it's just the case, we need to just put those in our budget. I'm looking at the utility directors going into the 2023 budget year, which is where these will actually take full impact. You know, we didn't think it would be right to just change everything in the middle of a year. So they'll have time to put together and make sure that it fits within their budget. But overall, we're really excited about it. First of all, because we're pretty nerdy. We really like these things, but it is very transparent. And there are spreadsheets that go all the way back and go into, and then each year as we put the budget together, we literally would just go in and enter the new budget numbers through the system. We're going to still use Nikki and her team to help update those. Just again, full disclosure, we want to make sure everyone realizes it's on the up and up. And then it's part of our budget process, so everyone will see them. And then at the same time, I don't know if I'm taking thunder away from you, these are then going to be audited by our auditors, and they will they really appreciate this because, again, in the past, they were a little cryptic on where these numbers came from. And so now it's wide open for them to be able to go and do the audit based on. So we're really excited about it. I'm glad that we're getting this chapter over and starting.
Is that all, Bridget?
Yes, sir, thank you.
I have one question, I guess it'd be for finance. With these numbers, does that give you a tool that we can look at and, I guess, investigate further on how we could reduce any of these?
Sure. Again, they're all it's very transparent. We're going to review and we go over with the directors all of the indirect costs that they do receive.
Mm-hmm.
And so, yeah, if there's an area, we really feel pretty strongly that these are good numbers based on the expenses that we're seeing at the city. Both here, we have office staff here that's officed and staff at the city hall. But yeah, again, they're going to be audited. They'll be laid out. The department heads will be able to go through and
Well, yeah, because
question or have
the reason I
questions on.
asked, I saw that city survey or whatever it was that the mayor put out, and for some reason, utilities costs are still up in the top 3, and I don't know any other way that we can do it. Jim put on a program last meeting to explain that to the city and to the people, and until we get industry in here, we can't really work hard on reducing our utility bills. So if we can work with a tool like this to reduce some of this, we can then filter it on down to utility bills, possibly. That's what I'm saying. Does that sound reasonable or just a stupid country boy?
I'm also a country boy, so I would never say that. As long as our overall expenditures go down, then yeah. As we continue to look at cutting all of our expenditures on any of these, that $10 million, as that goes down, what's allocated into the utilities would also go down.
As a citizen, I think $437,000 for the city council is ridiculous. I'm sorry. That's a joke. Okay, that's all I got. Thank you, Brian. Anybody else got questions? Dave? Okay, thank you very much for your presentation. All right, we go to the reports. You're up again, finance man.
I'm actually going to turn this over to our Chief Financial Officer, Cindy Gray. She's the one that's been putting these numbers together and then telling me what to say in the past. So I figured this time, why don't we just hear it directly from her? So I'm just going to go ahead and turn it over to Cindy.
And I was with you last month as well. So we are looking at the August 31st financials, and which is period 2 in our new year. And We are pretty much the same as we were as the first month. Not a lot has happened. A couple notes on the water side. Again, our revenues are trending a little higher, which is good. We also have a couple expenditures, which I mentioned last time, where we have made some encumbrances, some purchase orders for year contracts. So it makes the numbers look like we're over target, but you have to remember they are for the full year and not just for the first 2 months of the year. One of those is the Mississippi Lime. That was a large contract for the year. So that is why numbers are a little skewed on that particular one. The other thing I wanted to mention on the financials, the target balances for our reserve. One of the things is that those target fund balances, we use the calculation based off of our audited financials. And so we usually will get once we get those audited financials, we'll recalculate those targeted fund balances, and then we'll start using those once we get those calculated. We anticipate those being revised in the month of January. So come January, the hope is that we'll have new calculated fund balance reserves. And we'll be bringing that as we go forward. Also, on our list of reports is the pilot audit update. Just so you know that our pilot calculations are the audit for those actually happen with our yearly audit. So our auditors that come in every year look at those numbers and do an audit on those. Brian has asked me to make that a high priority, that we actually do a more in-depth review of that, of which we will be doing. And once we get our audit, we'll get those calculations, the reports from the auditors. We'll make sure we make any adjustments to make sure we're following best practices. So
We don't have anything on the pilot now?
not currently. They've been audited through our normal audit procedures, but as I just mentioned, we'll be having them review them a little more in depth this year.
Okay. Any questions, board? Bridget?
Thank you. So thinking of our year end last year, we ended with multiple $1 million deficit for our original budgeted allocation. Are we anticipating that you are on track for revenues, that you're going to have losses, gains? I know you're in period 2.
Yeah.
By period 2 last year, we were already in trouble. So do you anticipate that we will make any ground, lose any ground, or stay even? Thank you.
I'm going to say we're probably right on track right now. So, and as we go forward, if we see things going one way or another, we will for sure let you know and start making adjustments.
Okay, anybody else?
Yeah, I've got a couple of questions.
Go ahead.
It turns green. There you go.
Okay. I was looking at some of these open capital projects, and just for my own benefit, there were a couple where the original budget, like I'm looking at Substation E switchgear replacement. The original budget was $950,000, and then we had budget amendments for more than $2.5 million. And then there was another one for and these are just ones that caught my attention, main replacement on Sherman Road. For the original budget was $50,000, and then we had almost $500,000 in budget amendments. I'm just curious as to why, like the main replacement, we went 10 times more than what the original budget was for.
So I can answer. Dan Montgomery, Water Systems Director. So on a main replacement project, what we will do is go out and bid the engineering of that first. And so the first year in the budget process, you'll see
just the part of the engineering design, that type of maybe acquisition of property or whatever, depends on what it is. But then you will see when you get closer to the next year, you may end up having millions of dollars put in there for capital to actually build, in this case, a transmission main to replace the main hire contractor. So that would be the answer I would give for the one that you asked on our side.
Regarding Jim Nailed, Power and Light Director, on the Power and Light projects, what's labeled original budget, and finance can correct me if I'm wrong, but the original budget is this year's request, and those budget amendments are from previous years, because a lot of these are multi-year projects. So we've already budgeted in previous years, like on the switch substation E, we had budgeted 2.5, and then for some additional pieces that were coming due this year, like this year we actually purchased the switchgear itself, then that got added in as an additional request.
Thank you.
That got you?
I think so.
Okay. Confuses me all the time.
That would
Okay,
be
anybody
the-
else got a question? David? Anybody? Okay, thank you very much. Reports. You already answered most of them, finance. Is this yours already? No, that's all right. Municipal services.
We don't have much to report at this time, other than cranking through all these capital projects. We have a lot open, as you can see. Appreciated you all coming out for the tour a few weeks ago. I think you did every place that day, didn't you? Okay, so Dan appreciates it as well.
Well, it was an outstanding tour. You guys did a great job showing us where the bodies were buried, things like that. So I do appreciate you taking the time to take us around. And
They never show you where all of them are.
Absolutely,
you got the
anytime.
map. You didn't get the map,
I got the map.
but I do appreciate the time and the effort.
Okay. Mr. Montgomery, Water Department.
Kind of like Mike was talking about, main thing I was just going to bring up, council had the first reading on a water main replacement project on Gudgel Monday night. So at the next council meeting, 1st of November, that'll be approved for, that's 42,000 feet of pipe, $1.2 million. We're actually going to go spend that money. But what I want to talk about there is we're on our way to go address the issue that we have ahead of us of lots of mains to be replaced. So you'll be hopefully coming to you very often with those in the future. So, and again, we do appreciate you coming, visiting the plant. It helps us to explain it. It's so a lot easier to talk to you when you've been there, kind of saw what's at the plant and the distribution system. So we do appreciate you all and look forward to anybody else that's going to be coming on the tours. And it's as beneficial to you as it is to us. So we appreciate that.
Dan, where on Gudgel are we replacing that?
That's from Dodgen to Kings Highway.
Dodging to Kings Highway?
Yeah.
Wow. Okay.
It's 4,200. It's not a mile, but it's pushing it. And just to kind of give you a feel, so we'd have main breaks there. I'd have to look at my notes, but what I recollect is like a couple a year. That's a lot over the years. I mean, just to continually have main breaks, and usually that's what we find. We're going to address the areas where we have the main breaks first, and then we'll go to addressing other areas as we get moving forward. But those people who live along there will appreciate this work being done, so just so they're not inconvenienced. We get out and repair the main breaks as quick as we can. Usually it's within 3 or 4 hours, have them back in service, but still that's an annoyance if it's in front of your house. So anyway.
Also, is the marketplace paid off now? Money? Somebody.
That's part of the American Recovery Plan Act funding plan, and as of last Monday's city council meeting, that funding was still intact to do so.
To pay off the market to the water department?
Correct. I think it was partial payment, and the rest was going to come from the park sales tax fund balance. I can't remember exactly.
Well, I know that part of it was already paid.
Correct. There's a portion in the American Recovery Plan Act funding plan, and on Monday that remained intact.
Okay, well, but I'm saying prior to the Recovery Act, part of it was already paid. Is that right?
I think it's being paid on every year, and that's reflected in the financial statements
Okay.
each month.
All right.
Yes.
Thank you. IPL, information on the generation assets, Southwest Power Pool.
I had after the last meeting, I had a request that came in for just a listing of an explanation of what our generation assets are. So I broke it down in this report. I've got the city-owned assets listed first, but then I also included what we have with our purchase power agreements, so you can get a picture there of what we have in our portfolio. Also, there was a request for just a brief description of what our relationship with Southwest Power Pool is. And I gave a brief explanation there, but I also provided, there's two links. One has on SPP's page, they have a full description of all the different functions that they perform. And then also a list of all the market participants, and there's quite a few of those. If you click on any of those links, it'll take you to SPP's page. In addition to that, I just wanted to report back to you that subsequent to your recommendation at your last meeting, the council did approve the repairs to H5 and H6. So even though the quotes were several months old, GE honored the quote that they gave us, and we are working with them to schedule cranes and trucks to come in and start disassembling and haul it off to their shop. Other changes that are happening in Power and Light. If you hadn't seen the announcement, November the 8th, we have a new deputy director that will be joining us. And after he's on board, we'll certainly be introducing him to you all as well. He comes to us by way of Evergy and Water One, and we think he's going to be a great addition to the team. Our loss of linemen seems to have slowed down. I think we lost it in total. We lost 12 out of the 31. But we were able to hire 3. We're looking at possibly 3 apprentices, and we're keeping the job opportunity open on the website so that as we get other folks interested, we can take a look at them as well. So we're getting the job done. The crews are out there. They're scrambling a little bit to make ends meet, but we're keeping the lights on.
Okay. Any question for Jim?
Mr. Chair.
Down here.
Bridget?
Jim, thank you for the summary. Is it possible that when next group comes through for orientation, these are the kinds of things that they get given as an overview? It's just a lot to absorb, and so these kinds of shortcuts help an awful lot.
Sure.
Thank you.
Thank you, Bridget. I want to commend this board. That's one of the few things that the council had agreed with us on. I think we've made a step in the right direction. Thank you for all the board members for your vote. They finally listened to us. Okay. Now, discussions. Anybody have anything they want to discuss or cuss at? I don't think we have any action items, do we?
Mr. Chairman,
Yes.
I do want to ask Mr. Nail one thing. Mr. Nail, I am hearing from the news that natural gas is going up. Are we prepared, or what's your view?
The natural gas prices, obviously they do. That's the main fuel that we use, not only here but at Dogwood as well. When we set our offer into SPP to run those units, we take that into account at the pricing. So we should recover some of that in the retail pricing or wholesale pricing that we get back from SPP. If there are increases to cost that are not recovered, then those would be, again, like we've done with the winter storm, those would be reflected in the fuel cost adjustment.
Alrighty.
But I can't tell you exactly what it's going to be because it'll depend on what the retail rates are that for generation that come from SPP.
All right.
Thank you. upcoming items, we have the annual audit of the pilot, which we discussed earlier. Expert presentation on new generation and IPL development of future generations and 15-year electric consumption study. I would like for the board, members of the board, to come up with, I think these three items, the new generation, the future generation, and the consumption study should be for an open forum for what I want to say. Yeah, public meeting and hearing. So put that in the back of your minds and come up with some maybe exact stuff we want to do, and we'll get with everybody else and work on a date. And I think we'll have the presentations here first, maybe, and then open it up to the public. Does that sound good or not? Okay. The next meeting will be November 18th. Anybody want to make a motion? So adjourned. Nobody made the motion.
I was reaching.
You reaching? Man, I don't know what's going on here, but I'm gonna get home before 4.
I know.